Heather, we're live.
Hi, Beth. How are you?
I'm good. Welcome to Women Investor Wednesdays.
Thank you.
So, as you know, I started this because we had a little chit chat before, but I found out that of all of the investors in commercial real estate, only 3% were women. And of that, 50% were inherited or wives that just signed on their husband's guarantees. And I thought that that was crazy. And I have a mission that I want to get more women to invest. So every time I meet a woman who invests, I like glam on. I'm like, you have to come on the podcast and come to the conference. I'm so excited you're coming to the conference. We sold out yesterday.
I know. I got in off the wait list. I couldn't believe it. I felt so grateful that that happened. It's meant to be.
It was meant to be. So let's jump in.
Okay.
I want to talk about way back when, because a lot of the audience, I would say if we have, hundreds of, like a few hundred people watch the video, some like usually over 100 are watching it live. And then we have a bunch of people that watch the recording. I would say 50% are just starting. So I want to talk about in the beginning, and then I want to go through the journey. Okay. So let's go back and what was your first investment?
Well, my family has been investing for a long time, and I've been in real estate for a long time. So when you gave that statistic about 3%, I'm not surprised at all. I've been in commercial real estate since 2004, more on the property management, asset management side. And I can't tell you how many times I was the only woman in the room. It's very heavily male dominated. Getting a seat at the table is always, something that you really have to fight for. And so I've gone through that for over 20 years now. I really started to, my last couple of companies, I had some really good leaders, and I saw some of the things they were doing, and it kind of pulled back the curtain for me. I got to participate on a level as I climb the ranks that I'd never been able to before, and start to really look at deals from an owner perspective, holistically, not from a siloed, I'm just running this asset management piece, but more as a holistic thing from the different perspectives of the different people involved. And once I started seeing that, I thought like, hey, this is something that I can do. I can start my own company. Like I can really make a go for this. And so that's what I did 4 years ago. I left my corporate career, which was a big, huge decision for me. And it wasn't an easy one.
How scary was it? How scary was it?
It was very scary. I had a little girl, I wanted to have another baby. So there were a lot of, factors, obviously you have a stable income, like all the things. I had fortunately started to invest prior to leaving my corporate career. I had a lot of real estate experience, but I wouldn't, it's difficult to get going if you don't have any income. So you need to start with some cash flow coming in. So I did my first deal on my own here in Los Angeles. I invested in a small multi-unit near Inglewood, California. I'm based in Los Angeles now. I'm in Culver City, California, in my office.
Was that a multifamily?
It was a multifamily, yeah. It was a small deal, and it had a lot of factors. We had a low income tenant. We had regular tenants, and I got to see some of the different dynamics that play in this submarket. Then we also went through COVID with that property, which is another learning experience, dealing with the legislation and all of the different things that California had to offer us at that time.
So wait, I'm going to stop you. So how did you find that deal?
I enlisted a broker that I had worked with. I knew that she knew this submarket very well. I had been introduced to her previously. I think she was the broker that sold a house to a friend of mine. And I had known that she knew the market well, and she did. And so I told her I was looking for a deal in that market, and we should do it. I later worked with her on, other deals as well.
So do you remember how much it was, the first deal?
The first deal was about, we paid about $500,000 for it. It was $525,000.
And did you get a loan? Did you get partners?
Yeah, we got a loan. And then we sold it. I ended up rehabbing it. And we bought it in 2019, and then I rehabbed it and sold it in 2022 for $775.
Yay!
Yeah, it was great. It was a great return. And during that time, we were operating it and so forth. So it was cash flowing at that time too.
Did you have issues with like during COVID, the tenants not paying and the legislation in California? How that's
that's something that I like to talk about, because, you know, as a sponsor, it's my job to know the different things that are coming down the pike in terms of legislation for different states, because I'm invested now in multiple states. You know, I have investments in California, in Missouri, in Florida. You know, we also have an investment in Mexico. So, you know, you really have to stay on top of those items as a sponsor and an investor. One of the big, you know, mistakes that I see for people who want to sponsor on their own, I mean, it's twofold. It's one, some of them never bother to actually go physically see that property. I can't tell you how many times people have told me, you know, this horror stories because they never physically saw the asset. They didn't know, you know, different markets have different sub dynamics. Like even, I can talk a minute about my, the property that we just leased in Cape Coral. I had another deal that I was looking at and I really wanted this deal, but I hadn't been back to Cape Coral in a while. And, you know, it wasn't really, it wasn't penciling at the time. And I finally had a chance to, actually, when we met up later when I came to Florida, I had a chance to tour that submarket, and it is in a much different subpar market to my current deal. And I wouldn't know that, you know, it looks like it's just a mile away. It's not that big a deal. It should be the same dynamics, the same factors, but they can't lease that place for the same rents that I'm leasing my place. And it's very similar product based on that location. You know, and these are things that you don't really see until you get there.
So important seeing the property.
Seeing the property. You know, I always make a point to travel a minimum one time, but, you know, several times to a place to make sure that I'm understanding the market dynamics from a primary research perspective. I'm not relying on a broker to tell me. I'm not relying on data analytics from a website to tell me. You know, I'm hitting the pavement. I'm talking to people firsthand, you know, people that work and live and breathe that market. I'm touring assets myself. I'm touring comps. I'm driving neighborhoods, you know, similar to you as the canvassing queen. You canvass, you have to canvass.
I mean, I just had a friend here from another market that was shadowing me for the day, and they bought a property, a strip center, and it was 20% occupied. They got a great deal, and they never went to see it. And they can't lease it. There's things, you know, it's on the wrong side of the interstate. It's, you know, and he said, well, we relied on the broker and the OM. And I'm like, are you kidding me? Like, you know, you just can't do that. So, okay, but let's go back to, so the first deal was this multifamily deal, small multifamily deal in California. What was the second deal?
The second deal I did was in Branson, Missouri.
And why Branson, Missouri? Why did we go to Branson, Missouri?
You know, I get these little, you know, I listen to the little birds in the air. You know, I started to see a lot of information about how popular this area of the Ozarks, which, you know, everyone knows from the show.
Love the show.
How popular it is as a vacation place. And so you know, a lot of people drive up. They drive up from, you know, the different neighboring states, which are easy to get to, and they spend time and vacation there. And so they have a very strong, for a certain time of year, a very strong vacation rental aspect. And so we were able to get deals, you know, these are beautiful furnished condos that we were able to buy at the time for under $200,000. And we were operating them at a 9% cash on cash year over year. Wow. They were doing great. And I had a booking system that I was using that I found. They're based out of Denver, Colorado. I love them. They're, you know, they're called Evolve. And they really just made it easy for us. They listed us on all the sites. I wanted to invest with them. They're a private company, unfortunately.
Keep talking to them. Keep
Huh?
asking them.
Yeah, I will. I'm
asking
going to keep asking them. Yeah. But they made it easy. So they had all of the booking, they did all the payments to me, and I had a really strong, because it's such a strong vacation rental market, there's a lot of competition also for property management and cleaning service, which is great because they have to really have a high bar and do well because it's so easy to replace them. That's another thing that I highly recommend. It's not seasonal. People live there year round. And so
How many did you buy? How many did you buy in Branson?
So we bought 4. You know, there were. I bought 1 on my own, and then we had investors for the other 3. One of them we leased as a single tenant that on a monthly basis, and then the other 2 are vacation rentals. And so they one of them we sold, and we actually sold that at the end of 2023. We bought it for $195. I think we sold it for $260. And it was making, and it was a 2-year hold.
And how, when you brought in partners, what was the structure of the partnership?
What was the structure? So we primarily syndicate. And so I started out small using friends and family. And, you know, I've been growing my investor base so that we, you know, because my deals are getting bigger. You know, these little ones, you know, I recently, you know, I have the deal in Florida. It was a ground up development that we completed leasing on last year. And that's, you know, that's finally fully leased and we're operating and it's doing great. But that deal was a $3 million deal.
So how do you give a pref and promote, or, you know, how do you structure the syndication?
Yes, we do. And so, you know, depending on the deal, we always give a pref, and then I won't take a promote until my investors are hitting their return.
Me too.
Yeah.
And what do you do about fees? Do you take an AC fee, an asset manager fee, a property management fee, a disposition fee?
Right. So yes, we take fees. We do an AC fee. I don't do, you know, occasionally I'll do an asset management fee, but typically no. We just do a property management fee.
What about a guarantee fee?
No, I don't do that. Yeah.
You can tell by my reaction. I don't do those either. I don't.
Yeah. So yeah, and also I'm not taking like a massive promote either. Like I try to stick to the 20% range, you know, in terms of my.
I mean, there's people out there doing 50% promotes.
Yeah. I want my investors to make money, you know, and
I want to raise the money fast.
Yeah.
I want to raise, you know, I tried to buy an empty Wells Fargo and it didn't end up panning out, but I raised $3 million in 4 days. That's how I want to raise money, because today, you know, it's so hard to find deals. And when you find a deal, you know, if I get 30 days due diligence, I'm lucky.
Right.
So I can't be, you know, pussyfooting around if I'm going to syndicate the deal. I need to get the money. I need to send the deck out, have one webinar or, you know, a Q&A, and then get the money.
Then they get the money. Exactly. You know, and you boiled it down. It's find the right deal, which in and of itself sounds like it's very simple, but you know, in this
that's the hardest part.
It's really hard, especially the way things have been going with interest rates lately, and people aren't moving on their cap rates. So it's upside down, you know, and so.
Okay, so you so you bought in California, then you hopped over to Branson, Missouri, and then you went international.
Yeah, well, I actually have another piece of land that we bought in Cape Coral, Florida. So that's the deal. Yeah, so we bought that. That land is appreciated 40%. We just bought it 2 years ago. We have also a luxury rental in Mexico.
And how did that come to be?
That came to be, this is actually, you know, an investment that my husband did with his family, and they built it from the ground up.
Wow.
And so we are now heavily invested in it, and I am running it, you know, full time on an operations side. And from last year, we've doubled the income. It's a luxury rental, so it rents for a nice price point. So it's making in the high 6 figures every year.
Is it like how much a week?
So for Christmas week, we typically average about 30 grand for a week.
Right. Yeah. I mean, We rented a place. A bunch of us got the Women of Influence Globe Street Awards a couple years ago in Lake Tahoe, and I rented an well, I didn't, all of us, but I spearheaded. We got an 8-bedroom place, and we had like 12 women stay there.
And how much did you pay for that?
$18,000 for the week.
Okay, yeah, and that's, you know, I'm in Mexico, so you know, you can imagine it's a 6-bedroom villa, and it's gorgeous. You know, we keep improving. We just improved the pool. We keep adding new structures. You know, I was talking to you earlier before we started that in the last 5 years we added a yoga deck, and so now we host yoga retreats there on a continuous basis. You know, we have a lot of
massage. And I'm literally having tomorrow. I'm going to tell my yoga person she should do a retreat there, and I would go for sure.
Mm-hmm. Great. We would love to have you, and you're going to be blown away. The food, everything is just phenomenal. And
you said a chef comes with it.
Yeah, chef comes with it, a full-time chef. Full-time housekeeping too. Yeah, it's the lap of luxury.
So when your husband's family built it, did they build it for the family, or did they build it to rent it out?
It was initially built for the family. And then over the years, you know, the opportunity and the way that the market has come, it's been a nice, you know, income producing property. We've built up, you know, with social media and with marketing over the last few years, because it hasn't been around for very long. I want to say it's about 12 years that it's been in existence.
How much money did you guys reinvest in it to bring it up to the level to where it's a luxury rental?
So the initial house was it was 3 bedrooms. So we built a building in the back that it has 3 bedrooms enclosed that are air conditioned.
Wow.
So you know we've spent, you know, a few $100,000 on it. It's not, these are Mexico prices, so it's not, you know the types of investments that you'd have to do here in the States, but you know, building the yoga deck, but all of this is, you know, it's been converted into, you know, the land itself has been owned for quite some time.
I just got back from Mexico. I went to a wedding in Merida.
Merida, where's that?
Yucatan.
Yucatan, okay.
But yeah, the pricing.
Mm-hmm.
Like you know, we had a big dinner, and like for 8 of us, and it was $32 pesos, or I mean, it was more pesos, but it was $32.
Yeah, amazing. Yeah, it's nice, and the food's so delicious, and the people are so warm, and everything. So it's just amazing.
We have 2 comments. So Candy says, "I'm watching from Dallas. I've been in real estate since 2016. I'm happy to be here." Candy Broadway. What a great name.
Amazing.
Love that name. I'd love to canvas with that name. Hi, I'm Candy Broadway. And then we've got Meredith West. Great discussion, ladies. Seeing any property that you are investing in should always be a top priority. Absolutely. I just returned from Florida to check one of her small rental properties. Always check it out. Okay, so you had mentioned before we got on the call that you are underwriting some new deals.
I am.
Which is so exciting. I just put in an offer on a deal 3 or 4 days ago. I'm waiting to hear back. So maybe it's starting to loosen up a little bit. Maybe the sellers are starting to say, okay, we're stuck at these interest rates. We're stuck at these cap rates. Is that what do you, so, and you're now looking to do more retail?
Yeah. So I'm looking at, you know, I was telling you earlier, I have a retail site that I have my eye on. And, you know, since watching you and how persistent you are, I've been very persistent with this deal. It's not in the bag yet, but hopefully it'll happen, and, you know, sending good vibes towards it and the flow and all of those good things. But I'm also underwriting a few multifamily deals. I have identified a submarket here in Los Angeles that I really am bullish on. And I just see there's just so much potential. And there's so much coming down the pike that I think, you know, I'm not going to miss the boat on it. And, you know, for the first time, I was underwriting this deal right before we started this, and I'm getting really excited. Yeah. Sellers are finally, the pricing is finally starting to make sense for buyers too. And so I am getting excited about that. And so I hope to make an offer on this either tomorrow or the next day. But there's 2 different deals that I'm looking at in multifamily.
So guess what?
Hmm.
When you come to the conference, we have little buttons that you can put on your lanyard that says, I have a deal, you know, like GP, LP, right? So, you know, you can meet women that you're going to love that might want to invest in deals with you.
I love that. I love that.
I mean, Natasha, I always tell this story. Natasha came, I think it was, she's been to all of the conferences, which we've had 4, but I think it was year 2, she was on stage and she had, I think, 50 units. And I said, well, how many are you going to have next year when you come back? And she said, I think she said 60. I'm like, no way. You need to have 100. And so the next year I said, who remembers my discussion with Natasha? How many units did I say she should have, you know, that I set her goal for her, or I challenged her? And someone in the audience yelled 100 units. And I said, Natasha, stand up and tell everyone how many units you have. And she stood up very like humbly and she said 108.
Yeah.
One of the deals, so I invested with her in 4 different, you know, like I think a 15 unit and a 30 unit. But one of the properties she bought was all women investors. And the majority of them she met at the conference.
Oh, nice. That is incredible. What you're doing here, I mean, on these Women Investor Wednesdays and the summit, I think, how many years have you been doing now? 5?
So yeah, this is our 5th year, which will be in 3 weeks. And then I started the podcast because I realized that I don't want the summit to become 500 women, because what you're going to see when you come, the intimacy of the women in the room, the group, and the authenticity and the transparency and the vulnerability, it just really makes it for a special room. And so I don't want it to grow. And it's not about making money on the conference for me at all. So if I can just break even, I'm happy. So I think I decided last year because we had gone to this phenomenal hotel. The food was great. It's a mile from the Fort Lauderdale airport, but they can only give us 230 seats. And I knew I could probably sell 300, 350, but I just loved the hotel. So I decided I want to keep it small and intimate because of what's happening in the room.
Yeah.
But then I realized that that's capping my ability to expose women to women like you. And so that's when I started the podcast. I said, if I can only have 230 women or 250 women at the conference, how can people meet Heather? Right? And so I said, let me do a weekly podcast where every time I meet someone and I find out they invest, I can put them on the podcast, and hundreds. And, you know, like every one of these episodes, we get on average 300 to 400 people, which means I couldn't have done that at the conference. So I'm so happy that people are watching and being inspired, because that's the whole goal. I don't want to teach them. I just want to inspire them.
Well, you've inspired me, Beth. You really have. You know, I've been doing this a long time, and you as an advocate for women is something that is frankly sorely lacking in this industry, and in a really big way, you're doing things for us, and I really appreciate that, and I thank you for that. And so I'm excited to meet all the women who are coming, and that you having me on this podcast is thank you.
Let's talk about, wait, I'm not letting you go yet. So
I'm not going anywhere.
Okay, so LA, Branson, Mexico, Cape Coral, back to LA, like you're all over the place.
I am.
You know, all my stuff is within 10 minutes of my house. So I don't know how you're doing it, but let's talk about some lessons you've learned, because this is what's important for me, is I want the people that watch this to take away, wow, that was interesting. She had this challenge and this is how she overcame it. Or even if you haven't figured out how to overcome it yet, but I mean, so so I know you run, so you have does the group Evolve help you in Mexico, or you do that yourself?
No, so Evolve is just a booking company. They don't do any of like the facilities or the property management. You have to remember too, I'm coming into this with a 20-year history in running properties nationwide.
Right.
So I have a lot of experience in this, but for people that are coming in, I recommend, sticking local. You need to have your hands, and if you're learning this industry, just the running of the property is going to require a lot of time and some hurdles to figure that out, and to make sure that you're getting the right tenants in there, that you're getting the right people that are doing maintenance. All of this stuff requires you to lay some groundwork, and it's a lot easier, and you're going to feel a lot better about it when you can drive over and physically touch that thing. The reason why I'm so diversified is that, there are some states that are just really great to do business in.
Florida.
Yeah, Florida is one of them. Missouri is one of them. Mexico is one of them. California has pros, not the same pros as some of these other places. But there's money to be made here too, but there's a lot more to learn in this state that you have to kind of figure out from legislative perspective.
When you decided that you were going to do Missouri, like I loved when I asked you, how'd you find the first deal? And you said, I called I called a broker. I heard that she had knowledge of the market, and I told her what I was looking for, and she helped me. I love that, because so many people, they're on Crexi, they're looking at foreclosures, value adds. They don't call brokers and ask them. They don't tell the brokers the buy box. I tell every broker that calls me my buy box, because one of them is going to bring me my deal.
Yeah. Well, this is where relationships come in. Like most of the time when I'm entering a new market, I've either heard it's come up a few different times. Either I've read about it from somebody else that's investing there that I know, or, I hear it from a friend or a family member. It always comes out organically for me. I have found that has been the way that things have worked the best for me, because when it's organic, I'm already working with people who I know, and they're recommending people. So the person usually is recommending somebody that they work with, that they had a good experience with, and it goes from there. So the reason why I'm able to invest in so many different states is that I have forged, and this also only happens when you're meeting people face to face and talking to them and spending time with them, is that I forge relationships in those markets, whether it be with brokers or service providers, people that I get to know on a personal level. It's very difficult to have trust and to build relationships from afar. And this is another key mistake that I see people do all the time, in lawsuits and all sorts of things stem from it, is, when you're doing things online or over the phone, people make a lot of big promises. They're going to offer, sometimes the returns that are too good to be true. I've had situations of people telling me about property management teams that are charging 30% of the income to do, they don't really know what they do. And frankly, they're not getting good reporting, or, they're just hiring, a handyman to do stuff, and they're taking a huge cut of their income.
Terrible.
But they don't know where to begin with that stuff. Like, you really have to put in the legwork. If you're not interested in being a sponsor and you want to invest, and you have, some money that you want to invest, I recommend that you find somebody, who is doing all of these things, making sure that they have your back, and that they're, looking at the different variables that are involved. There's opportunities, but there are also risks, and you want to make sure that somebody is taking those into account. They have the worst case scenario in mind. They've taken a look at that.
Right. Which property has the most partners, and how many partners do you have on that one?
What do you mean by partners?
Like if you syndicate and you have limiteds, so LPs, how many LPs is your most LP group?
The biggest LP group is 6 right now.
That's great.
Yeah, so
I have 28 in one.
Oh yeah, but you're doing your deals are somewhat larger than mine.
Well, but people go, how do you have to? It's fine, and I report quarterly to them. I tease them. They say, I'll give you 100. I go, if I lose your 100 grand, are we gonna, is it gonna hurt our friendship? And they go, yes. I go, then you can only give me 25 because I tell everyone I could lose all your money. I mean, I could lose all my money.
Right.
Do you put money in every deal yourself?
I do.
Me too. I put money in. I wouldn't invest with someone that didn't put in their own money.
Yeah. And also if they don't have money to put in, I would expect that they put in their acquisition fee.
Yes, for sure. Do you LP with anyone or do you only GP?
I have only GP'd on the real estate side, but I've invested with people in other investment
businesses.
Yeah. So because I'm in real estate, and I started on my own for a little bit, but I would like to LP with people.
With me?
Absolutely, Beth. I would like, and I was just thinking of you. I would love to do that.
If I get this deal, so I put it in offer. So I'm gonna see. Let's keep our fingers crossed. Because if I get it and I put it under contract, it's going to be part of the bus tour.
Yeah, terrific. Is it a retail deal?
Yes.
Yes. And is it proximate to your current redeveloping? That's fabulous. Have you had your eye on it and been before?
15 years I've been trying to get it.
Amazing. Yeah. Oh gosh.
Yeah. That'd be great.
When will you know?
I got to call the guy tomorrow.
Okay.
I can't say too much.
I hope you send me a text message and let me know.
He might be on this live watching me. give it away that I'm so excited that I would like to buy it. But it's got its issues, which we'll share on the bus tour if I get it.
Great.
So now, aren't you happy you're coming to the conference?
I couldn't be more thrilled. There's more good news one after the other.
All right. So, okay, what's one lesson you can share with the group that you had a challenge and you overcame it, and how did you overcome it?
Great.
You did have a huge career. That was very important. And I don't want people to miss this. Yeah. You had a huge, long career as an asset manager with huge companies all over the country. So my career was 18 years in Miami and maybe we went to Orlando. So that's why I'm so risk averse to being a GP outside, like what you're doing, but you did it in your career.
Yeah, so that's an important point, is that when I left my corporate career, I was on the executive management team of my last company. They had over $1 billion in real estate, and I was running the entire operational platform. So I have a lot of experience with this. And since I left that company, I also had another baby. So I've had some other things going on too. But that's an important point, because I'm not coming at this as a novice.
Women say to me, I can't do what you're doing because I have a W-2 and I have 2 little kids under the age of 10.
Yeah, you can.
Tell them how
I started when I had a W-2 and when I had, a little baby. She was only a year old when I bought my first deal. It's really, I think as women, it's really just getting over that hump. You really just have to sit down and do the work. Stop thinking about it. Stop, indulging your fears. You need to just sit down and do the work. Or, if you're looking to invest with someone, get to know that person, make sure they're level-headed, make sure what they're saying makes sense. They're not over-promising you. All of those things are very important. Most of the mistakes or challenges that I've had to overcome have been related to people. I've been people issues. It's, whether I'm working with somebody, I had a tenant this is a perfect example. During COVID, I had a tenant that stopped paying rent for over a year. I wasn't getting any income. I had to work the system. I had to figure out how I was going to get that money. And ultimately I got it from the state of California. I had to log in as the landlord and log in as the tenant because they wouldn't do the work on their side. And so I'm sitting here doing this work, and you just have to. And ultimately, I had a buyout for that tenant too, so that I could get that place and renovate it and make the nice return that we ended up with. But you have to meet these challenges. Sometimes you have to put more money in to make the payout eventually, and that's okay.
Absolutely.
Mhm.
Okay, so how, if someone wanted to get in touch with you, what's the best way?
They can send me an email.
What's your email?
My email is Heather, Heather, and it's my company is Clovand Capital. It's at clovand.com. You know,
Right,
they can
Clovand
also shoot me
Capital.
a text
Wait,
message.
wait, wait.
Yeah,
Heather at clovandcapital.com.
Clovand, no, just clovand.com.
Oh,
So
clovand.com. Okay. And when, how did you get to
I'll show you
Clovand?
my little, here it is. Clovand.
There you go. And tell me where Clovand comes from.
It is a hybrid of my children's names.
I
So
love that.
my daughter's name is Clover and my son's name is Brand. And so I pushed them together and called it Clovand. So they'll
I
always
love
have
that.
this company. Hopefully one day they'll take it over from me.
Absolutely. Heather, thank you so much for your time tonight. We right now 143 people. I told you. It's
Fantastic.
I mean, literally, I think the first year maybe we had 30. So thank you all for joining us live. And Heather, thanks for time. It's early for you. It's only 4:30 for you. You guys, you can go and keep working.
I intend to. I'm excited about this deal. I got to get this offer out.
Yeah, you get the offer out, and I'll see you in 3 weeks at the conference.
See you in 3 weeks. Take care, Beth. Bye, everybody.
Bye.
Bye.